What's up, y'all? DeFi time again. Another portfolio update in this pretty terrible dip. Although dip is it's relative because it's a good time to buy, but it's not always fun to see your asset prices down. So I'm in my HODL portfolio right now. Actually, probably got to log in. All right. So right now in HODLs we got 279. It's actually a good time to buy in. I gotta do that probably tomorrow afternoon. I'll add to these positions. One problem I had was I just started doing this, so obviously I had to like track what I'm doing, and whenever I swap to buy more of some token that I'm holding, especially when prices are cheap, which is a good time to do it. I want to know exactly the USD value that I'm putting in. So I didn't really have an easy way to do that. So ChatGPT recommends like checking the actual scanner, the block scanner for whatever chain it is. So I'll start doing that. And if that gives me the clarity I want, then I'll make a video on it. But I'll figure that out because I need to know. And then I'll see like the value over here, and that's just whatever the market value is on the day that I check it. But I want to know exactly, and I can see how much tokens I have in total. That's fine. I'm not tracking like how much I add yet. But the USD value I do want to know. So right now I just kind of add like whatever I added, and then I'll track the actual value like whenever I do. But generally, like until I have built these up more and I care and like the numbers are higher, basically, like I just kind of track the total value right now in general. So this is probably down a bit because prices are all pretty cheap right now. Even my Solana's down. uh, and it's SUI 2111. So this is just from dip to 53.59. Yeah, like if I go and add to these hodls right here even a little bit while the prices are low, there's a good chance that when prices rebound again and everything follows ETH and Bitcoin back up, then because the tokens were cheaper when I bought them now, then these overall prices will go up, and the value will go up even more, even if it's like not sustainable because the prices go up and down a lot. But the floor, like the base amount, that it won't go lower basically, because in general they keep going up over time. So if you keep lowering your cost basis by buying when it's cheap, then you'll raise the floor of your value overall, and that should keep going up. And then I'll add a graph here eventually so I can see like the whole HODL portfolio, how it's doing, if it's going up. But I mean, that's all you really do with HODLs. You just buy cheap and keep adding and don't sell them, and then you can do other fun stuff like lending and staking once you have some more. At least that's what I'm going to do. So I'll have to figure out how to track like lending, supply, profit, and which usually just compounds in itself. So I'll have to record like every day what it was yesterday and what it is today and so on. Like I'm already used to doing it. Um, but that's like the only way I can really track actual profit on, staking or whatever. But, it'll be fun because there's already a lot of like protocols that offer lending and staking and liquid staking and different ways to monetize your just assets you're holding. So apart from like liquidity pools. So you just have to like optimize and try things, yield optimizers, whatever. It'll be more stuff to get into. Uh, but for now, not doing too hot yet, but still not a terrible loss. But it's just started really. So I'll just take a note, 253.59. So that's the HODL value. Now I'll go back to, oh shit, I've been showing main LP the whole time. But anyway, yeah, I was in here. Um, and I was saying like the asset values here, like making sure that when I whatever add to it, like after the swap, like you don't get exactly what you swapped because there's swap fees and pretty much just swap fees. So like what you actually get in USD value that you deposited into the token, that's what I want to record, what I actually get like price appreciation applied to, or what it changes. Because I mean, if I got to pay something in swap fees, that's money lost. That's just stuff what you have to spend basically to do what you want. Is how DeFi is, and then other people providing liquidity for those swaps, like me elsewhere, get paid. So it's just I'm not tracking that. I just want the USD value, because I mean, if the strategy works, then the appreciation is going to take care of whatever like swap fees, and I'm not going to worry about like trying to recoup that with my appreciation. It'll just work out. Like I see that like don't swap with like your actual wallet, and you'll save a bunch of swap fees in general. Use like 1inch or Squid Router or something. So or a DEX, it'll always come out cheaper, and it's just part of the game. You always gotta spend on your swaps. Just I just try and like reduce how much I swap if I can, but I don't worry about it too much. So anyway, I've just been tracking like the actual HODL portfolio value until I add more to these allocations, and then I'll care more of like if the strategy is working, like dip buying basically, which apart from like I said about staking and lending and stuff, which will add more profit, and I'll track that like down here somewhere in another table. Just the appreciation from dip buying is like mainly what I'm concerned with. Like anything on the top is nice from like staking and lending, but I'll have to see what kind of APRs I get for that, or APYs. So 253.59 for HODLs, and I'm gonna get through this quick for updating my main tracker here. So right now from yesterday we got 109. I almost expect this to be in the negative today, because like ETH went below 4,200, and it might keep going lower. There's been a lot of institutional inflows, so I might keep the price up around 4,000 and go back up. But who knows how many like weak players it's going to shake out, and how low the prices will go until it goes back up. But I believe it will, of course, so I just buy in if I can, like nowish. Maybe I'll do that tomorrow a bit, or in a couple days even. It's fine to have patience. Like if the price jumps back up, fine, I'll just start printing again, and all my layers that are out of range right now, like all my SUI stuff is pretty much out of range, because it's only like 346 or something right now. But I won't just go and rebalance these. I've seen this happen over and over again. Like the price will just go back up for like a week or two, and I'll just print. And then like right now, if I have dry powder, or if I can pull money together, I'll just go like buy more SUI, or go buy whatever is out of range. Most of my Arrow stuff is in range still, which is nice. But like with SUI, I would just add to like these lower layers, or even a lower layer, like 325 or something. If it's 345, 325 to like 365 or something, then I know that these other ones like will get activated when it goes above 350, and the new one will stay in range until 365 or whatever I do. And the rest of these will go up to like 420. They'll capture fees. So that's it. Like you just have patience. I don't like to rebalance just because the price went out of range and then lock in all this impermanent loss. I think that's a big way to like avoid losses with DeFi. Just having patience, add new liquidity, and know that like your price will eventually go back up if you believe in the token, and it's not just some meme coin. And also like if you study the pattern, like you see it go up and down, like it's just gonna matter of time. If it's correlated with ETH and whatever, you just notice this stuff, and you don't put all your eggs in one basket basically. So anyway, so we got 37.17. I mean, I don't even look at this like that's too bad anymore. Like prices going down, I just adjust and buy it back in, and let the portfolio cost basis go down, and then prices will go back up, because the pools are generally correlated, or I just know the price pattern, like with SUI or virtuals or whatever, and how they follow ETH mostly. And now supply was like 27 yesterday, and now it's down to 7, so stuff changes all the time. But Radiant's a good place to park your USDC, like dry powder, I think. I got reeled in with their whatever their DLP stuff, but it's a waste of time, and I wouldn't bother personally. It's just like you borrow some ETH and then you got to pay it back, and it's just to earn like a few cents, and it's pointless. I think most of these protocols, like, you find little yield earning programs that they have, and I just think they're a waste of time. Like, you'll make way more just doing liquidity pools and I guess staking and like lending if you're really risk averse and you don't want to do LP, but you can do LP like relatively safely, I think, and skip the staking and lending unless you're doing HODLs only. Then it makes sense there. Like, I wouldn't want to do LP with my HODL portfolio because this is not what I'm trying to do with it. I only want to do like one thing at a time with each portfolio or each strategy, really, which gets its own portfolio usually if it's different enough. That's just the way I do it, though. It's not financial advice. Don't do what I do. Go watch other people's videos and study and do your own research. I gotta say that every time, but I mean it. Don't quote saying I told you what to do. It's just what I do. 87, 85. Even if I doubt some LP, I'll still leave it in there like a couple days just to see if it'll do better, or like in a upswing maybe start like earning more fees or something, and then I can justify leaving it. This is like 5. Everything's probably down today. 122. Yeah, that didn't even. I'm gonna start tracking this. I got my arrow stuff. I really like base and arrow. That's a good pool is on arrow. It'd be interesting to see what swap fees are. Seems like volume is a little higher today, but we'll see. 42.39. It's surprisingly better than I thought it would be. Oh. Oh. Oh, I'm doing WETH. I'm doing the wrong pool. Okay, that's why it seemed better. That's more normal, I think, for right now. Some weak volume. Or 2078. Yeah, that's what I was thinking. now is a good time to buy. I haven't seen overall swap fees. Overall, I think this low in like a couple of these cycles. So I'm expecting, and then it usually pops back up after. So I'm expecting if I were to buy in or add some liquidity to a bunch of these, I would see some solid swap fees like in, well, whenever things go back up, however long that takes. Could be like, usually like a week, week and a half at most, but you never know. Could be something I haven't seen yet. That's DeFi. It seems to overall be stabilizing in general, but crater level dips aren't unheard of, so just have to see how things play out. I also had days where like you'd see like no fees, and then the next day it would pop as if the protocol's like all held onto the previous day's fees and then added it to the next day, but or for whatever reason people are just not doing much, and then they all flood back in. So could be that too. These swap fees here are probably mostly people swapping ETH for USDC as the price went down. But that's the whole idea with a dip, really. See who can't hold it and make it cheaper for the ones who can. Again, I'm doing the wrong pool. Actually, not that bad then. Thought none of these were in range for a sec. Maybe they're not. Okay, they are. So, when are we BTC? So if I were to rebalance this right here, I'd lose at least 35 bucks on it, and there's no way I want to do that. You know, especially when I know price will just go right back up into it, and it'll print fees again. That's what I think a lot of people don't think about. They just want fees now, and maybe they don't even think if or calculate like if they'll make it back. I mean, that's the game of just chasing like tight ranges and stuff. Like you have to if you're rebalancing a lot, but just let price and go back in range eventually, and you'll recoup that plus any appreciation you get from buying when it's cheap, like right now. But I like to update everything, even if it's not that fun seeing like losses basically. Just have to remember it's temporary. Alright, finally that should be it for today. I don't expect too much. 586, I'll take it. You know, definitely trending lower with the fees. Just because when things are down, nobody wants to buy in and swap, but when prices go back up, it goes crazy. So you know you can get like a surge if you got more bigger portfolio, and even if you don't, like you'll notice a difference when it pops back up, or it'll just go back to normal pretty much. So yeah, I'm down like 135 now, but totally acceptable to me. I mean, I've been down like 1,000 is from like when I first started. Like I bought my first positions like, and everything cratered like a couple months ago. REIT just dropped to like a new lower level, and then everything kind of went back up, mean reversion from there. But so I recouped a lot of that. just from prices restabilizing, I guess, lifting the whole thing up. But I'm happy with like up to like negative like 10% or something, even like negative 500. But honestly, like I don't really see the prices going like that much lower at any given time. They could, but they'll just go right back up too. So, and I'll keep measuring it either way. But for the most part, I just want LPs to print yield when things are in range, and I don't want to rebalance too much. So I'll just let prices like normalize and stay in the range that has made sense. I mean, that's how you pick ranges. Like you can set them tight and chase APR and rebalance a lot, or you can set them wider and try to and test the pool and get a sense of um, what the price does and how easily you'll stay in range, how long, how stable that volatility will be basically, and go just calibrate from there, widen it on another layer or add more liquidity to the same layer if you want or if you can. Um, but usually I just like layering them and around whatever the price is when I'm buying more in, and you'll just stay in range in multiple layers. And I mean that's the whole thing I think with this. So let's get our averages. Nothing fantastic, but good. Any yield is good. Uh, 551, 6, and we got 166.77. So yeah, we're like under profit a little bit, but we'll just have to see how far ETH drops. Like tomorrow it could be 3,800, and tomorrow it could be 4,500. Just want to see it stabilizing, and that's what I did with this DeFi stuff. Like I got into liquidity pools and just follow the price. I realized everything follows ETH and Bitcoin pretty much, so you just try to find things that are correlated and go with that. But ETH's price is gonna fall, so at some point, and then a rebound, and hopefully you bought in when it was cheaper, and your whole portfolio will go up even more than it would have if you just basically held your positions and didn't buy in anymore. So I'm thinking that's a good idea to start doing. 586. That's all I really care about at the end of the day is the average like yield I'm making monthly, so I can figure out like how many bills I can pay, a percentage of it that I pull out. So I'm not too worried because I buffer it. I'm not gonna like depend on yield basically, like all of it. So the more I can pull out reasonably, the more I will pay bills with it and use it for whatever. So these dips, they don't usually last too long, honestly. Like a week, week and a half at most. And then you get another like week and a half or 2 weeks of uptime, of upswing. It's like evens itself out kind of, but that's what I'm saying. Like if you buy in when it's cheaper, like you'll bring the whole thing up, the whole portfolio up. You'll end up with more value for the tokens you paid that you bought, and you'll your layers will go back in range, and you just print again. So it's like all your liquidity will just be activated again, and so you take a few days of like low APR like this, like I had back here, and then you get like a nice, couple weeks here like this, and even back here was good, like and then you take, I mean it depends because like I've been adding more, and I did have like more funds to it, and I did have like decent APR throughout here, so it's really only like a few days here and there where it's not that great, and that's just how the market swings. But I mean the way I'm doing it, I think it's pretty structured. Like APR stays pretty high, I don't rebalance a lot, and so I keep the same positions, there's just higher fees when people are excited and jumping in buying more crypto when prices are going up usually. So you get that like inflation of swap fees basically just from the activity. And that's all you really want with LPs. At least I do. Get my averages. I do a 10-day average of like daily yield and monthly yield, which is just this times 30, the daily yield times 30. And I just put like how much I think I got deployed is what I use. I gotta update that. 510402. Probably because depreciation. And then 10-day yield, average for APR. Just staying pretty solid. So yeah, not too fun of an update, but I mean, I want to show you like what it looks like if you're just new to DeFi, or I don't know, you don't track stuff that much. If this helps, like track your pools, track your profit. I think is important, so you can see like your trend. Like these, I didn't start from the beginning with the tracking. I had already harvested yields, so I mean they could be higher in general, but I'm good with just kind of keeping a record of each one since I started doing it. And and the more data you have, the more like decisions, the better decisions you can make, and the more you see what's happening like in the structure of things, you can optimize your strategy, which I still am. So I'm not saying I got it all worked out. Go watch other people's videos who know what they're doing more even. So I'm just sharing what I do. So I think that wraps it up for today. Down day, but not too bad honestly, and still printed some decent yield. We just have to see what the market does. Could be 10 more days like this. It could go right back up tomorrow. So it's a good time to buy, I think, because that'll raise your portfolio floor. Like what should happen is if I put a bunch of liquidity in now, then when things go up, they'll go up higher than they otherwise would, and when they dip again, I could stay above profit. And that's kind of what I want to do, is see like these lows like stay higher than they used to be. And I mean, part of that is just the market. If just people have more confidence in like ETH and crypto in general, and there's not these huge swings, maybe because a lot of institutional like whales buying in, it keeps things more stable during dips. But I think you can kind of control it just by buying when prices are low, while you pick good LPs and don't rebalance too often, and just let the price kind of go right back up in when it does, when it's ready to, because it will. I've seen it happen several times already with like Sui. But buying in now, it's like when it does, then those same tokens that you added to these lower layers will be worth more, and you'll print more yield, because that yield will like be based on more tokens, like you get more share of the pool you're in, or in the ticks that you inhabit with your liquidity. And everything should kind of inflate, but like in a sustainable way. So that's the idea. I mean, that's just how I see like dip buying. I know people just say buy the dip, and it's intuitive, but that's how I see it as far as playing out in like LP mechanics. At the end of the day, it's just a couple assets in a pool, and that's being managed. I'll explain like how I see liquidity pool mechanics and how they work, and the AMMs and all that in another video. But there's a lot of people already explaining this stuff. So, but I'll explain stuff my way. That's why I do this channel, in case it helps somebody understand differently, I guess. So yeah, that's for today. Thanks for watching.